Is now the time to start investing in gold? How do you start? If you want to learn more about this powerful investment vehicle, watch this video now. Hello and welcome back to another video with Mind Money Masters. Thank you so much for watching. Are you worried about potential inflation? Concerned that the government is spending too much money and how that may affect our economy? Many people have turned to precious metals as a potential protection in difficult economic times. But is now the time to invest in gold? In this video, we're going to go to discuss why people invest in gold, ways to start investing if you decide you want to, and tips for investing. I will give you my final take at the end, so please stay until the end for additional information. I want to start off with a great quote by Antony Sutton. Those entrapped by the herd instinct are drowned in the deluges of history. But there are always the few who observe reason and take precautions, and thus escape the flood. For those few, gold have been the asset of last resort. What do you think about that? I have a couple of book recommendations for you in the description if you would like to learn more, but I find that interesting that basically he's saying that there's always been issues with financial floods in history, and the ones that actually escape the flood are those few where they've been in gold. Interesting. So as a disclaimer, I am not a licensed advisor, and the information presented here is solely for informational purposes. I am not recommending any particular investment strategy, so please work with your licensed advisor before making any investment decisions. So that being said, why do people invest in gold? Traditionally, people have invested in gold when there are uncertain times. These could be when basic commodities rise, times of political and social unrest, or when people seek security for their investments. Gold has been seen as a protection from the effects of inflation. Gold also appears to be something quote-unquote real, as a tangible item, which it is. A gold bar sitting in your safe or a collection of gold coins have a physical presence unlike any kind of digital investment. This can be comforting when huge uncertainty arises. So in today's world, these reasons may not be as valid as they once were. Most financial advisors would recommend that the percentage share of your total portfolio that's invested in gold should really not exceed somewhere between 10 and 20%. Now, gold prices may well be unpredictable as the stock market, which is something that not many people think about. They think it's kind of more secure, stable. And it's more secure and stable, but there's definitely some volatility associated with gold. The traditional goal with the physical commodity was to beat any potential inflation of the US dollar. Now, since 2013, the price of 1 kilogram gold bar has varied from $35,000 US to $45,000 US, which is a $10,000 variance in 9 years. A gold bar is much more convenient than gold coins and easier to track the value. However, it's harder to sell the coins that you have to sell. Basically, it's easier to sell the coins than it is to sell the whole bar. Because the whole bar obviously being in chunk, you don't want to cut off a piece of the gold in order to sell it. So, if you do buy coins, which are, common, and these are commonly circulated and have a better known value than I guess, a well-tracked value better than gold bars. If you do buy coins, make sure that you do your due diligence and basically focus on those that are, commonly circulated and well-known. So, I think that's something that people typically are really interested in, that intrinsic value. And there's always been a value associated with gold throughout our entire history. When the settlers came over, they looked for gold from the Native Americans here. So, it's kind of interesting that there's always been some type of value associated with gold. And why is that? That's why certain people, I would say, invest in gold. Now, there's many ways to invest in gold. Most gold dealers will not accept card payments, and they want to use cash, electronic transfer, or a cashier's check, certifiable funds to make purchases. You may mistakenly believe that investing in gold involves purchasing a physical piece of gold. In reality, that's really only one piece of it. So you get a certificate. Now, there are three ways of buying gold. ETF, an exchange traded fund that tracks the gold index, is a way to get exposure to gold. That's investing in gold. You could invest in a mining company, building or buying a physical piece of gold. That's another possibility. Now, the ETF is very much like an individual stock, and it's traded on the exchange in the same way. The fund holds the contract, they're backed by gold, so technically when you buy an ETF, again, you don't own any gold, but it's backed by gold and backed by the gold index. This is a way to get exposure to the gold market, but still subject to stock market fluctuations. Now, you could use the ETF as a diversification measure within your portfolio and get that exposure. But again, you're still looking at paper assets here, which is only one piece of the asset quadrant. There's several ways to invest in gold and to get exposure to the gold market. I would suggest getting some training on how to properly invest in the gold market. I will have a link actually in my description to a program that can help you get invested in gold in the foreign gold market and all of that. So, the biggest thing you got to remember with an exchange traded funds that tracks an index, it's still a paper asset. It's not physical, tangible gold. Gold mining stocks and gold mining companies are a way that you can invest in the potential for gold. This means that your investment strategy is based on the success of that particular mining company. It can be a risky investment, as investing in gold startups are typically highly volatile and fluctuative. They don't know if there's going to be gold there or not. You're basically putting forth your cash if there will be. Now, there's obviously they've done their due diligence and they've done their scientific research, and there's the high potential probability for gold, but there's always the risk that they don't strike it rich. And if they don't strike it rich, you don't get anything. Now, if they do, obviously, you're one of the initial shareholders and you can buy and sell out as soon as you would like and make quite a bit of money off of it. You may choose to buy actual physical gold. This might be in the form of buying gold bars, gold coins, even jewelry. Buying gold bars is a big investment. Like I said, 35,000 to 45,000 fluctuation. And if you later choose to liquidate your gold assets, they could be harder to sell. Gold coins, as I mentioned, are easier to manage and you can sell some coins and retain others. Gold jewelry is a traditional investment. It's inefficient really because you pay for the jewelry to be made, and you may actually pay more than the gold is worth. Because remember, you're not just paying for the gold itself associated with the jewelry. You're paying for the time that it takes for someone to make that ring or that earring or that necklace. So, bear in mind that once you buy actual gold, you will need to store it safely to protect it from any type of theft or break-ins or anything. The optimum storage is to use a bank safe deposit box. You could keep gold in your house, but it's going to require potentially a higher insurance premium if you declare it. That's something that definitely you want to consider a safe if you do have gold specifically in your house. So, tips for investing in gold. Buyer beware. There are a great many scammers online that purport to selling gold. Do not purchase gold from unreliable websites. Choose a reputable dealer. That's just kind of common sense, and I know you already know that, but at the same time, it needs to be said because, again, there's a lot of people that try to take advantage of other people out there, and you want to choose from a reliable source. Do not regard investment in gold as a method of short-term investing. It is not a short-term investment. Gold can go up and down in value, and you may need to wait before you can sell it for a profit. I will talk a little bit more about this on the next slide, but gold has been highly volatile in the past, and in some case, investors have been upside down and are still upside down in their value to what they paid for. So remember, when you buy physical gold, it's a tangible asset. This is just one part of the asset class model, and it's important to have some physical assets for protection, but these assets are not quick flips or quick turnarounds. Another investment strategy is to buy a small amount of gold each month. No matter what the price, this will assist in helping you ride out the rises and the falls in the market. This is a common practice used in mutual funds called dollar cost averaging, where you purchase over time various incremental values of the mutual fund. And in this scenario, though, you'd be buying physical assets, which would be much more valuable in the long term than just a mutual fund. Mutual fund is not an asset. Mutual fund is just an investment. But you basically dollar cost average your gold. So that's actually a way that you can buy over time and continue to invest and take advantage of the ups and the down fluctuations in the market. Okay, so my final take. One of the things that I really want to bring up here is that, again, these are just ways to educate you and to offer alternative solutions. Gold is an option for a hedge. It may not be the best option. Many of the reasons that people traditionally invest in gold are actually no longer true as they once were. There is research around Treasury inflation protected securities, also known as TIPS, TIPS. These do potentially a more efficient job of protecting you from inflation. Now, I would obviously talk to your tax advisor on the tax ramifications of TIPS, but there could potentially be tax benefits in investing in Treasury inflation protected securities as a government security. If you're trying to protect yourself from troubled economic times, gold may well rise in value during a crisis, but it typically can shrink in historical values. We see that it shrinks once the problems have passed. So sometimes you get in high and then all of a sudden it goes lower and you're upside down. Often gold investors end up holding gold for much longer than they originally planned while waiting for the next price to rise. Whatever you plan to do regarding gold, it is certainly best practice to limit your investment to no more than 20%, probably closer to 10% of your portfolio. Now, investing in gold can be expensive. Historically, it's been considered a hedge. However, if you invested in gold in January of 1980, the equivalent price adjusted for inflation was over $2,500 per ounce. Now, gold is just right around over $1,800 per ounce last time I checked. In this scenario, had you bought gold in January of 1980, you would still be negative. Because if you think about 1,800 now is the highest it's been based upon, recent prices. $2,500 back in 1980, which was 30 plus years ago, 40 years ago. You're going to be upside down $700 per ounce. So in a general sense, buying gold can be a hedge, but it's, not necessarily always a hedge. And also, it's one of the asset classes. It's just one. It's one of the four. So investing in gold is part of the commodity asset class, along with investing with any other precious metals. I did do a review of investing in silver, and that's going to be my next video, actually. But there is a blog post in investing in silver, and I'll give you a link to my website. So you could check out investing in silver, which might also be another option against inflation if you're not necessarily looking to get into gold. Remember that commodities are, again, one aspect of the asset class model. There are three other asset classes to consider. I talk about these a lot in my videos and in my blogs. So in order to build true financial freedom and wealth that will last for generations, which is, I hope, what everyone is interested in doing, you need to have at least 5 streams of income across all the asset classes. I talk a lot about investing and a lot about the stock market in many of my posts. And it's important to look into all of these different assets. But I think one of the best investments in yourself is to have a business of your own. Now, you could start with a side hustle, working about 30 minutes per day, or if you want to work 10 to 12 hours per day, it's completely up to you. You can decide. But if you want to learn how to start a business and scale it to achieve any dream that you have for yourself or any goal, I definitely want to help you. It requires help and it requires education to make money. I will have a link actually in my description for the exact video and program that I used in order to build a secondary side business where I can have the time and talk to you about financial freedom and financial education and investing. Please take a look at that. It's a real short video, probably about 10 minutes long. Thank you so much for watching. Again, I'll have multiple links in my description. We'll talk about some books. We'll talk about some recommendations. So please check that out. Also, make sure to subscribe to my channel. Turn on that bell for notifications for new videos that I send out. Cheers to your success and happy investing. Thanks.